Hello and welcome to Currency Point, presented by me, Evan Lucas, for FP Markets. As always, please have a very good read through of the disclaimer on screen. Everything in this video is general in nature. None of it is relied upon as any form of personal advice. FP Markets does not know your personal scenario, nor your personal financial goals, and therefore none of it is relied upon as any form of advice at all. It is just general in nature only. This week is going to be the start of the curbing. We already know that the Federal Reserve will raise rates on Thursday morning, Wednesday, depending on where you're watching it from, and it will be at a minimum of 25 basis points. The question that's really coming, and the market continues to ask this question, is whether or not and how fast they're going to do it. On that, we've talked about this before. It looks more likely that the board wants to do it on a sort of gradual, slow, steady speed, but inflation at the moment is incredible. There is no other word to use than that. And at 7.9% year on year for headline inflation, not including the fact that all of that massive increase we've seen in oil over the last 2.5 weeks is yet to be priced in. So the idea that inflation is going to fall off anytime soon is very, very unlikely. What does the board actually do? Where does it leave them with that sort of momentum to do what they need to do slowly, but also making sure they contain inflation back to 2%. That's where they want it to be. And that's what's the whole interesting conundrum. Now, stripping out food and fuel, etc., it's still at 6.4% in the States. And that's 440 basis points above that 2%. So what do they do? And I think the market is waiting for that this week to really understand how the central bank is going to deal with inflation in the States that is, let's be honest, starting to really run away with it. And I think you've seen that also in FX. The US dollar is a little bit all over the place at the moment. It doesn't really know exactly where it wants to be. It certainly wants to be higher, and that's what we've been seeing for the last year and a bit. But we don't have a full direction as to the understanding about how hard the Fed will go to try and curb inflation. Because the other part of this, the Eastern European conflict, is going to have an impact on growth. And central banks don't want to put a handbrake so much that they cause a recession. And that's the tightrope they're now walking with regards to where they sit. And that's why it's going to be so interesting to see how they communicate to the market about what they're going to do. Because the market clearly believes they're going to pull the handbrake hard and fast. So does that therefore mean we're going to see an unwinding of US dollar positions if it doesn't have at that same speed? Does the Ukrainian conflict give them the ability to maybe do a bit of a head wobble and sort of hold the line a little bit longer than expected because the current initial issues in inflation is down to supply chains rather than demand? The thing I also need to concentrate on this week and talk very quickly about is the euro. The euro is being smashed, and we've talked about this before. But the trade that's really interesting, that's catching a lot of people's attention, is what's going on in commodity-based currencies to the euro, specifically the Aussie and the CAD. If you haven't had a look, have a look at the the Euro Aussie and also Euro CAD. Euro Aussies went from 162 down to as low as 142 in the space of 20 days. And now rallied back up to about 149, but in saying that, it is still at a 5 and a bit year low in terms of where it sits. The Canadian dollar, however, is monstering it off the back of that oil trade and got to a level not seen in Euro CAD since July 2015, a 7-year low. Again, has bounced, but in saying that, it is a clear trade that people are watching, and it's certainly given a lot of people the opportunity to really jump in on something. Interesting to note was the ECB. They were hawkish, much more hawkish than we expected, and it did create a pop, but if you to see oil move the way it does and has from the Ukrainian conflict, they're the two to start watching, particularly EuroCAD. And that may be something to be just a little bit exotic to what you normally do.